Welcome to Yahoo Finance's flagship show, Morning Brief, presented by Robinhood, the home to commission-free trading. I'm Julie Hyman. Let's get to the three things you need to know today. First up, the Fed decides. The U.S. Central Bank will issue its final rate decision of the year today. Investors are pricing in a quarter-point cut. However, the path forward for rates is not as clear. Traders will be closely watching Jay Powell's press conference for any indication on the Fed's plan for interest rates. The central bank also releases its updated summary of economic projections, what we call the dot plot, which will show Fed officials' predictions for interest rates. Tune into Yahoo Finance beginning at 2 p.m. Eastern Time for live coverage on the Fed rate decision and Powell's press conference. Yahoo Finance will also be live from the headquarters of Apollo Global Management, the parent company of Yahoo Finance. We'll have interviews throughout the day from guests including Apollo CEO Mark Rowan, its chief economist Torsten Slok, and many, many more great guests. Plus, the AI trade faces its next test. Oracle will report earnings after the closing bell. Wall Street has soured on the company in recent months, with the stock sinking 33% from its all-time high it hit back in September. Investors have grown skittish due to the company's heavy capex spending and circular nature of its deals. The data storage software provider has become a central AI player after striking a $300 billion deal with OpenAI. But to fund its compute build-out, Oracle had to raise $18 billion through debt offerings. And SpaceX is eyeing a $1.5 trillion valuation when it goes public. According to Bloomberg, Elon Musk's space company is looking to raise more than $30 billion through an initial public offering in 2026. SpaceX's faster path to public markets is in part fueled by the strength of its fast-growing Starlink satellite internet service. The company is expected to produce about $15 billion in revenue in 2025 and post a sharp increase in 2026. Shares of other space companies, publicly traded ones, rising after news of SpaceX's IPO plans. Let's get a check in on stock futures. Although there's not much to say, they're very, very little changed here this morning. Not unusual for a Fed decision day. Even if the cut itself is priced in, there's still a lot of uncertainty about how the votes are going to go in terms of the different Fed members, as well as what Jay Powell will say at his press conference. So let's dig more into these top stories of the day. Joining me now, senior reporter Brooke DePalma live at the NASDAQ, Federal Reserve correspondent Jennifer Schonberger, and our tech editor Dan Halley. Jen, let's start with you. It being our Fed decision day, as I said, we're expecting this cut to happen. It would be very unusual if it didn't. But there's other points of suspense, and some of them have to do with what happens after today.
Yeah, absolutely. Everybody's expecting the so-called hawkish cut, where the Fed cuts today by 25 basis points, but then shows restraint looking into 2026 with expectations for them to hold just one rate cut for next year in line with what they had projected back in September. And I think it's important to understand why that's the case. As we go into 2026, the Fed will have done 3 insurance cuts to guard against downside risks to the job market. And there are still very many on the FOMC who are concerned about inflation, and rightly so, because it is still running roughly a full percentage point above their 2% goal, not just because we've seen upward pressure on goods inflation as a result of tariffs, but also because of services inflation, which has been quite high, running around upwards of 3% for the past 2 to 3 months. You couple that with expectations for economic growth to actually bounce back in the beginning of next year. We expect the shutdown to curtail GDP in the fourth quarter, but then rebound in the first quarter. You also have that tax bill, which is expected to increase the amount of refunds that consumers could see in this economy, which could translate to higher spending power. And you still have in place that full expensing from the tax bill as well, which could lead to greater investment and perhaps more job growth. So all of those factors together are sort of expected to make Fed officials take a step back and survey things, and rightly so, I think.
Yeah, most definitely. And the other sort of point of suspense that has to do with next year is who the next Fed chair is going to be, Jen. And we do know, or at least the president says, that he continues to sort of narrow down who he's looking at.
Yeah, in fact, Julie, I have just learned this morning that the president is beginning his interview process for the candidates for the next Federal Reserve Chair and will be sitting down with former Fed Governor Kevin Warsh today, along with his aides, according to a source familiar with this interview process. He's expected to meet with the remaining candidates, including frontrunner NEC Director Kevin Hassett soon as well. But all of this really underscoring that the president may have not actually settled on Hassett yet. And last night he reiterated aboard Air Force One that he is talking and looking at a couple of different people and will obviously make a decision soon, where he has said that he will make that decision beginning of next year.
And he's also said he wants the next person to cut rates, sort of unequivocally.
Right.
He repeated that in an interview yesterday. So then the question becomes, and Brooke, for this, I know that you've been digging into it. Then the question becomes what the market does in these various scenarios, right? So given that broad expectation for today, what are you seeing out there in terms of what the reactions could be?
Julie, definitely a lot of rhetoric around what exactly the market's reaction will be in the immediate innings of this afternoon's trading session. Citi out with a note this morning saying that markets already largely priced in a quarter-point cut, and so they don't really expect any reaction if that is the case that ends up happening, which already seems to be baked in by the markets. But really all eyes will be on the guidance, on what exactly the Federal Reserve says around their plan, the path forward, and really any clues as to whether or not they will continue to ease or rather cut rates in 2026. And that's really key for this market right now. Tom Essay, a portfolio manager, saying in a note this morning that he's hoping for a not too hawkish cut with more easing expected. He said that could really hint at the S&P 500, or rather lead to the S&P 500 continuing to trade at all-time highs. He went on to say that anything that disappoints the doves, that could weigh heavily on stocks in this afternoon's trading. And what's interesting is that we're getting a further easing baked into these 2026 outlooks from companies like JP Morgan as well as Wells Fargo. JP Morgan actually coming out with two different scenarios. They said that if the Fed does not cut, they expect the S&P 500 to reach 7,500 by year end. But if the Federal Reserve does continue easing, then they expect the S&P 500 to reach 8,000. And Wells Fargo also baked in further easing into their 2026 outlook. The bank saying that they expect the S&P 500 to reach between the range of 7,400 to 7,600. And in their note, they specifically pointed out that out of the 20 times that the central bank has lowered rates with the index, the S&P 500, 2% or less from a record high since 1984, the S&P 500 has been higher 100% of the time 12 months later. And so if the Fed continues to cut, there definitely is a bull market ahead.
Okay, what about what's going on in the bond market? Because that's been a little bit confounding. You know, even though there's this expectation that the Fed's going to cut rates, we've seen the longer end of the curve yields actually go higher, which doesn't usually happen.
Yeah, right now the 10-year is sitting around 4.2%, the 30-year is sitting around 4.8%, and that's actually the highest that we've seen since September. And so what's baking into that is a few different aspects of what exactly investors are looking at. There's concerns around U.S. debt, also policy and trade uncertainty is still ongoing, and that's definitely weighing on yields this morning. Also inflation uncertainty, and on top of that, a stronger economy is also weighing on yields as well, and that could mean less aggressive cuts by the Fed if this economy continues to persist stronger on and on. And so definitely that's weighing on yields this morning. Definitely keeping a close eye on that. Also worth noting that global bond yields have hit a 16-year high as fading rate cut bets really has, sort of went through the markets on a global perspective as well.
Okay, so the Fed is part of what we're watching, but of course we're continuing to watch the AI trade, and Oracle's reporting after the close. This has been viewed, Dan, as sort of the weak link in this whole AI narrative, if you will. So talk to us about the stakes here and what you're going to be watching for.
Yeah, it turns out if you commit to spending billions of dollars on data centers for a company that may or may not be able to pay for it, investors get a little wary. We're seeing Oracle, obviously, their stock price is down from an all-time high around the September period. That was after their prior earnings, where kind of people started to get very wary about what was going on with the company, and what it will eventually see out of its various deals with OpenAI. But for the quarter, we're expecting EPS of $1.64, revenue of $16.2 billion, remaining performance obligations of $519 billion. That would be up 433%. Now, that's basically jobs that the company has on the books that its customers have not paid for yet, but will pay. And so that's what that metric is telling you. And so that obviously is something that we've seen a lot more interest in when it comes to these kind of huge AI build-outs, that remaining performance obligations. And then free cash flow is expected to be down to negative 5.9 billion, and that's obviously as a result of these large build-outs. So the kind of long and short of it is the company's got to show that it is continuing to see improvements as far as revenue, as far as EPS, to kind of justify these large build-outs. But I think that when it comes to the street, there's still very much this fear of, are we in a bubble? Look, you could ask anybody until you're blue in the face, and you're going to get yes and no. 50% of the time, it seems. We had at the New York Times Deal Book Summit, Dario Amati basically saying, some companies are spending, they're YOLOing, is what he said, basically, just diving risk first. Didn't say what companies that he was specifically mentioning, but, it's OpenAI. That's where
we can put it together.
Yeah. And so, and then you have other companies, like he said, that are spending more judiciously and taking that risk into account. And so, it really is at this point, it seems 6 to 1, half dozen the other when you ask someone if there's a bubble or not. But Oracle's earnings are going to be an interesting one to watch, I think.
Right, for sure. Then we have another company reporting after the close that's sort of a different flavor of the AI trade, and that is Adobe. And it has more fallen in line with many of the software stocks, where there are a lot of questions about competition from AI that they are trying to harness in their products to still be relevant.
Right, yeah. And Adobe has various deals with AI vendors at this point. They, however, have some newer competition from, the likes of Google. They have their Nano Banana version of Gemini, which is a very fun thing to say. But it is a image generation app where you can basically come up with, high quality images just by typing in what you want to see. And it really is quite striking to see the kind of editing that you can do in apps like this. And so that is going to be something that I think investors are going to be watching when it comes to this company, or continuing to watch. For the quarter, we're looking at EPS of 539 and revenue of 6.1 billion. But, they're making deals to incorporate more AI from the big AI companies into their own offerings. And so it's important for them to do that, to obviously stay kind of ahead of the curve, or even with the curve. But I do think that the increased competition from, as you say, those other AI companies, the ones that they work with, could be problematic in the long run.
Yeah, so we'll see how that all works out. We'll see what we hear from them today as well. Brooke, Jennifer, Dan, thank you so much. Coming up on Morning Brief, we'll bring you today's top trending tickers and count you down to the opening bell. We'll be right back. Welcome back to Morning Brief, presented by Robinhood. Now time for some of today's trending tickers. We are watching SpaceX, GE Vernova, and Chewy. First up is SpaceX. Elon Musk's space company is looking to raise more than $30 billion through an IPO in 2026. That would mean a $1.5 trillion valuation when it goes public. The public offering would be one of the largest ever, rivaling that of oil giant Saudi Aramco, which went public in 2019. It would also mean Elon Musk would be the CEO of two of the world's most highly valued companies. Next, GE Vernova, shares jumping after AI growth helped fuel an increase in its long-term revenue outlook to $52 billion by 2028. The power equipment maker also announced a boost to its buybacks and dividends at its investor day. Oppenheimer upgraded the stock to a buy equivalent rating after the event, and other analysts said the company had beaten high expectations. GE Vernova has benefited from soaring demand for electricity driven by data centers and AI. Tune in later today, because I'll be sitting down with GE Vernova CEO Scott Strazik. Finally, Chewy, the pet retailer, posting third quarter earnings and sales that topped estimates, but the stock's been whipsawed today as investors digest its fourth quarter outlook, which came in below expectations. Still, after 2 years of declines, Chewy added active customers for a fourth straight quarter. Chewy also noted customers spent an average of $595 during the most recent quarter, with Chewy spending it there, up 5% year over year. Right now, the shares are up by 6%. The Federal Reserve is widely expected to announce an interest rate cut today, but many people will be looking beyond the headline number and honing in on how many FOMC members dissent from the Fed's decision. Among those likely to be tallying hawkish and dovish votes is Danielle DiMartino Booth, Q Research CEO and chief strategist. She's also a former advisor of former Dallas Fed President Richard Fisher. Danielle, what a pleasure to see you. It has been far too long.
Julie, how are you?
I'm doing well, just riding the waves here, surfing the waves of what's going on in this market. So what will you be watching for and listening for closely today? As someone who is an avid Fed watcher, what do you think is going to be most important today?
Well, I think we're going to see the same exact dissents that we saw at the last meeting. This is Jeffrey Schmid's last vote for another 3 years before he rotates off of voting. So I think that he will be the hawkish dissent. I think Stephen Myron will, of course, dissent for a 50 basis point rate cut, as opposed to the 25 basis points that we're expecting and that's priced in. The question is, are there others? And that's what we're going to be looking for very closely. Could it be somebody as close to Jay Powell as one of his top lieutenants, John Williams of the New York Fed, who has expressed serious reservations about the Fed's employment mandate? We'll have to wait and see, but there are a handful of dissents on both sides that could easily come in today.
And so what do we extrapolate from those dissents going for as to what happens next?
So the Federal Reserve, I was there for almost a decade. It is not, it's not an institution that is accustomed to prolonged periods of dissent among its ranks. This is kind of endemic of the fact that Jay Powell has no longer really the ability to corral the ranks, as is traditional among Fed chiefs. This is going to, I think, introduce much more volatility than we've already seen going into 2026, and because 5 months can feel like a dog year when it comes to the last 5 months of his term.
And then, of course, we've got the overhang of who's going to be the next chair of the Fed, of course. As I'm sure you've seen, the president is going to be interviewing people. He'll be talking to Kevin Warsh, I guess, but reportedly Kevin Hassett's in the lead. Who would be your pick? If it was up to you, who would you pick as the next chair?
Difficult question, but I do find Christopher Waller to be highly analytical and very balanced in his approach to monetary policy making. So he has been this entire time my top pick. And I appreciate the fact that he does not advocate for zero interest rate policy. He does not advocate for quantitative easing. So he's to me, at least, he should be the shoo-in.
Do you think Kevin Hassett will be a mistake if he is indeed the president's choice?
Well, that's a very good question. And Kevin Hassett was very forthright a few days ago in saying, I don't think that monetary policy can be planned 6 months out. In other words, I think Hassett was trying to protect his integrity and signal to the president, yes, I would happily accept the nomination. I would happily be the chair of the Fed, but you're not going to be able to dictate how I make monetary policy. It will continue to be a live process that is data dependent. I actually respect Hassett greatly for coming out and taking that stance.
Do you think the market will buy that? Do you think he will have credibility in the eyes of the market? I guess we have been seeing yields go higher. That probably has less to do with who's going to be the next chair of the Fed versus other factors. But what do you think is going on there?
Actually, I think the reason we are seeing yields go higher is what followed the Hassett interview. If there's not certainty that you're going to get a yes man as next Fed chair, then maybe what the dot plot reveals today is what reality is going to be. Maybe we can't even plan on two further rate cuts in 2026. I think that that's what markets are reacting to right now.
Why wouldn't we be able to rely on two? What would that scenario look like? Do you think that inflation has not been sort of tamed here, Danielle, and that could mean fewer rate cuts?
Actually, Julie, that's the opposite of my view. We just had the employment cost index come in showing that the most pernicious form of inflation hit a 4-year low in the latest print. September is very dated data. It'll be interesting to see what non-farm payrolls are this coming Tuesday. But I think the Fed has lost its employment mandate, and I think that there is just cause for being more aggressive on the rate cut path. But again, right now, the institution itself is riddled with dissent and riddled with politics.
Okay, so just to make sure I understand you correctly, Danielle, you don't think necessarily the Fed will cut as much as the market expects, but you think that's a mistake.
I do.
Okay.
I do. I think that market should be pricing in an easier path, given what we're seeing from countless sources on the U.S. labor market.
Great to see you. Thank you so much for joining us.
Good to see you, Julie.
And coming up on Yahoo Finance opening bid, executive editor Brian Sozzi joining us now, but he's not in the studio next to me where he usually is. Through the glass on my right, he's at Apollo Global Management. So what's coming up today?
Julie, good to see you. Enjoyed that conversation you just had. Yeah, we're taking you inside the world of Apollo Global Management, of course. That is the parent company of Yahoo Finance on Fed Decision Day in America. And for all you folks on the Yahoo Finance platform right now, looking up the Mag 7 stocks, figuring out what to do next with them, thinking private credit has nothing to do with any of those companies, I'm here to tell you, Julie, that is totally wrong. We're going to dig into the private credit market. This is a market helping to fund this country's data center expansion. Also, Apollo, very big in the retirement industry. We're going to dive into all these things, Julie. We're just getting started here. We're hanging out by the coffee bar.
Looking forward to it. That does it for Morning Brief presented by Robinhood. You got Saz next on Yahoo Finance.